Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So first of all, just to touch upon last week's price action, as we mentioned, you wanted to have all eyes on the FOMC statement last week, and we did certainly see that big volatility off the back of the statement there. So for those of you that watched Gold Asset of the Day, you will know that we discussed the potential for you to reload on gold, but be patient to get in at lower prices. Look to get in sub $1,940 per ounce. We got a nice sell-off during that Wednesday FOMC statement, which followed through to Thursday, giving us an opportunity to reload right down towards the weekly lows and then capitalize very quickly again on a Friday breakout there. So we banked another 200 points on gold on Friday. We also banked 575 points last week on platinum before the FOMC statement, and we currently have 2 trades on Palladium going to next week, which are both currently up over 4,000 points at the moment. So effectively that's 5,000 points of profit. Now of course, for each 1 lot traded, that's $50,000 of profit. For each 10 lots traded, that's $500,000. And as we've mentioned before, these current market conditions, the volatility that we see right now is definitely optimal for trading. It's not buy and hold market right now. You want to really capitalize on this volatility. And of course, last week, the most important takeaway from the US Federal Reserve's policy meeting was that the Fed intends to keep interest rates near zero until the end of 2023. That, of course, creates an incredibly bullish environment for the precious metals to thrive. However, the Fed also announced a big shift in the monetary strategy between now and the end of 2023. The goal being of placing their primary focus on achieving maximum employment whilst allowing inflation to run above their target of 2% over the long run. So if the Fed is focusing exclusively on employment and inflation data, then so should traders, and that will ultimately drive market sentiment and price direction moving forward. And elsewhere, we also had the Bank of England confirming the central bank is preparing to cut interest rates below zero for the first time in its history as the economy faces a surge in coronavirus infections and the risk of a no-deal Brexit. So essentially, the Bank of England now is opening up the door for negative interest rates. So what does that mean? It means that capital that you have sitting in the bank will earn no interest, and in fact, you will be paying to keep your money in the bank. So there's never been a better time for you to trade, be able to compound your returns rather than let capital which sits in the bank devalue and depreciate. Now is the time to take control of your trading and investing so that you're making your capital work hard for you. And of course, the way that you do that is via trading, which is both liquid. It gives you full control to multiply your wealth regardless of whether the markets move up, down or sideways. And of course, we're moving into a lucrative macro driven period filled with back-to-back trading events between now and the end of the year. And one of the biggest news items, of course, is going to be the US presidential election. So expect higher than usual volatility over this quarter. Data is power, and if you get too complacent in these markets, that's where you get crushed. If you want to thrive in these market conditions, you definitely need to be nimble, you have to be adaptable and utilize a research-driven approach to ensure that you're getting that edge in the markets to capitalize on each of the big moves, no matter whether the markets are trading up, down or just sideways. Where you're trading the ranges, that's where you need that accuracy and precision. And that's where technical analysis and outdated technical indicators, they won't work in these market conditions. And if that's what you're relying on, then you've really got no edge in the markets, and that's where you'll keep getting chopped up essentially. The greater the data intelligence you have, the more your edge will be enhanced. You need to know how the hedge funds, the banks and institutions are positioning themselves in the markets, where they're buying, where they're selling in real time, so you can get that timing precise. The key liquidity zones, fundamentals, proprietary macro intelligence, the seasonal cycles, the intermarket correlations. You need to be trading like a professional, utilizing a research-driven approach. So with that, let's go through the charts and we'll talk you through exactly what we're looking at here as we go into a new week. First of all, moving over to gold. In summary, this market is range bound, and this provides us with lots of opportunities to continue to take advantage of the price action that we're getting here, where we're just very simply ricocheting at the moment between levels of key support and key resistance. In fact, if you take the chart out to a higher time frame, take it out to the monthly chart or the weekly chart, just draw in that previous all-time high at 1,920 US dollars per ounce. You will see that since we broke above that all-time high, previous resistance has now become support, and we keep on seeing buyers come back in at that zone multiple times. Each time we're coming back towards that zone is providing a great opportunity to sniper in and then take advantage of a 500 to 700 point move to the upside here. Just continuing to trade in and out of this market is much more profitable than just buying and holding. I'll give you a great example here of why buying and holding at the moment is not the right strategy. So if you bought, for example, towards the end of July, beginning of August, you've essentially made no money on this market. All it's done, it's broken out to all-time highs, it's then pulled back to 1860, it's broken out just above $2,000, it's pulled back again towards 1900, it rallied again back towards 1990, and then pulled back again back towards 1900s, and again it's found resistance at 1970. So essentially buying in around those levels end of July, you've really made no money by buying and holding at all. Whereas us at the Gold and Silver Club, and many of you who watch our reports as well and comment on this, is you've been able to capitalize multiple times on all of these retracements, just reloading on the dips and then just taking advantage of this continuing volatility for gold, which is very profitable for trading right now. And of course, many retail traders out there have been getting chopped up. They FOMO by buying too late into the move, and many also panic sell. When you start to see their sell-offs with gold, they start to come out of their long position, and even worse, they short it just as gold is about to get a bid. So again, I really encourage you to look out on the higher time frames there. Look at where we've broken above the all-time highs and where that all-time high around 1900 to 1920 is now providing support. So going into next week, we have long positions on gold. We have long positions as well on Palladium going to the Tesla conference on Tuesday. We banked some sizable profits on platinum last week, and we're looking at an opportunity there with the platinum to gold ratio, which I'll talk you through in just a moment. So with gold going into next week, we are at a decision point here. You can see where it has been building up pressure now over the last 6 weeks here. So what we want to see going into next week is a resolution of this consolidation. Bear in mind, we have Jerome Powell speaking on Monday at 3 o'clock UK time. We then have Jerome Powell testifying on Tuesday at 3:30 p.m. UK time as well. I would just continue to take advantage of the consolidation of this range-bound price action at the moment. It really is the best way to trade this market. Just maximize on this volatility right now. So I would continue to trade the range on gold for the time being, and be mindful again that on Tuesday we have Jerome Powell testifying, and he's due to speak again on Monday at 3 o'clock UK time. Then moving over to Palladium. So Palladium has been a great market for us. We discussed this with detail with you over the month of August, that you wanted to be building into your long positions to take advantage of the breakouts that we'd like to get going into September, and then the Tesla conference that we have on Tuesday as well. So we're up over 4,000 points over 2 trades at the moment on Palladium. So again, each one lot that you would be trading on this market, you would be up $40,000 on that trade. Each 10 lots that you would trade on this market, you would be up $400,000 at the moment on this position. It's a pretty big move that we've identified with you over the last few weeks here on the commodity reports. You can see the breakout that we've seen since that point. We've continued to consolidate throughout August, much like gold, in fact, where it just continued to ricochet into a pennant, and then Palladium finally broke out to the upside, and it gave us a monster move in a very short period of time. But we want to keep some exposure now on for the Tesla conference, which is going to be on Tuesday. And I mentioned it last week, I would just continue to be a buyer of dips of this market with Palladium, and that's just worked out really great. Again, in the latest week, you can see here each dip has been bid back into with Palladium. So again, have that on the radar. Tuesday Tesla conference, that's where we want to have. Certainly keep our exposure on for a potential breakout on that announcement on Tuesday. With platinum, I've had a few questions about this. We banked 575 points on platinum just last week ahead of the FOMC statement. The platinum to gold ratio after the FOMC statement, it started to break down again, which signifies that gold is going to outperform platinum in the short term. So what we've done there is we've switched our position there. We banked 575 points on platinum, and then we reloaded on gold after the FOMC statement, after the sell-off, and then we banked 200 points on Friday on gold, but kept some exposure as well. In summary, what I'm looking at here for platinum is to pull back further between now and the end of September. I'm expecting the ratio to continue to be vulnerable here. So for gold to outperform platinum over the next week, but then I'm looking for buying evidence back towards the lower end of this channel. So I will be looking out for buying evidence towards 900 down to 870 US dollars per ounce. I'm happy to be patient here with platinum, but I'm looking for more corrective downside on this. I'm looking for gold to outperform platinum in the short term. By the way, I'm expecting very similar here with silver too. So for the gold to silver ratio to favor gold over silver in the short term, it has started to break out to the upside here, particularly on Friday. Silver was down 1% on the day on Friday, whereas gold had a positive gain. What silver needs to do in the short term on a closing basis is continue to hold above $26 per ounce. And by the way, take the chart out to the monthly chart, the weekly chart. That is a major level going back to 2011 that got supported on 3 separate occasions on the much higher time frame. Each time the price action tested $26 per ounce, that is where buyers came back in. And since we had the large breakout towards $29 per ounce at the beginning of August, silver is now finding a new layer of support at $26 per ounce. That's the level that needs to hold at the moment. If we get a break and close below that level, you can expect the gold-silver ratio to break out to the upside, and gold will outperform silver, which is overall my positional bias at the moment, but I would still watch that $26 per ounce level on silver. Going into next week, especially in the earlier part of the week, we want to be very focused on Palladium for the Tesla conference, and then we're going to be switching a lot of our focus as well to the first presidential debate, and of course non-farm payrolls that we have the following week as well. So there's going to be some real key news items that can provide a lot of volatility and some massive trade opportunities too. As I mentioned before, if you would like to learn a research-driven approach to the markets, it's very important that you're trading the same information and you're looking at the same data that the hedge funds, the money managers, the institutions are. You want to be trading the same way that they are, not like the average retail trader that is using outdated technical analysis and outdated technical indicators where they are getting chopped up all the time. You want to have an edge in the markets, utilizing research, market intelligence, the intermarket cycles, be aware of where the key areas of liquidity are and what the hedge funds and banks are doing week to week. That's where you're really going to get your edge in the market. So with that, if you would like to join a community of successful traders and become a member of the Gold and Silver Club, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to our real-time trade alerts, trading research and market insights, access to our private member academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.